Hi. So for those of you who are watching it on video lately, after this, we just saw a Bitcoin mob, flash mob, if that's proof of anything. So we're lucky to have a pretty great panel here today. Ray wasn't able to make it, but we've got Barry and Jing. And they're both here to kind of look into their crystal balls for us about the future of FinTech. I'm going to start with Jing, actually, because I was reading up on you and you got you were called the Oprah Winfrey of finance. So the first question actually is a very serious one. I'm wondering if we should all reach under our seats and see if we've won a free Cadillac or something. But no, the first question, I'm actually going to start with a quotation because, you know, when I'm talking to sources, I cover mergers, acquisitions, and deal making around a variety of spaces in the US. What venture capitalists and private equity folks always talk about is they say the next 10 years are going to be far more radically different than you can ever imagine. But we always think that the next 5 years are going to be not quite as radical as they actually turn out to be. What I want to look at is from the FinTech point of view. Why is that change happening so rapidly? Why is what's driving that change in terms of FinTech today? Can we start with you, Jing?
Well, thank you very much for the introduction. I'm afraid I don't have any free giveaways. They do call me the Oprah Winfrey of the investment world. Maybe perhaps sometimes I appear on TV, but oftentimes I prefer to be in your seat, interviewing others rather than being interviewed.
It's much easier.
So today, even though we have no Bitcoins or anything else to give away, hopefully we can offer the audience here some interesting insights.
Insights.
Yeah,
Bitcoins.
so in terms of FinTech and the banking world, I just want to highlight a few interesting trends. I work for JP Chase, the world's largest financial institution by market capitalization. So I think our market cap is around $350 billion. We are definitely the largest bank in the US. FinTech is really changing the world. But if you look at the relationship between FinTech and traditional banks, in fact, the relationship is not just one of competition. I would say the relationship is one of collaboration and cooperation. If you look at the core competencies of banks versus FinTech companies, they're very different. Banks have the scale, we have the customers, we have branches, but FinTech companies are much more nimble. They are technology driven. They also have a lot of engineers who are always retooling, who are always testing products, retesting products. So I would say we have to recognize, number one, the FinTech world is not a zero-sum game. You know, banks and FinTech companies can both have a role to play. So I think banks can utilize FinTech companies to strengthen our core banking business, and FinTech companies can tap into the banking world because we have existing banking customers. We also have existing scale. So I would say the relationship is actually one of cooperation. And I would think there's competition as well.
Yes.
But eventually, cooperation should triumph.
It is a different dynamic, isn't it, Barry? Because it's, you know, normally what we see in any disruptive play is that you saw it, you know, in the music industry with Napster. You know, the music industry tried to shut that down. Video was VCR, and the, you know, Hollywood industry tried to shut that down too. Why is it so different this time around? What are the strategics realizing in this case that the startups have? And you know, we have seen that. It seems to be the consensus that FinTech 2.0 is not about kicking down the door on the big banks. It's about collaborating with them. What can the banks offer?
No, definitely, I fully agree with Jing's concept of the future of FinTech and the future of financial technology is at the inflection point of where FinTech businesses and traditional financial institutions can create strategic opportunity and strategic value. I think separating out your question from the standpoint of looking at the China market versus the rest of the world, I think
good one.
Taking a unique, looking at the China market specifically, a lot of things are happening there in the China market that are not happening internationally around things like really consumer uptake for FinTech products and services. They're much more willing to embrace a FinTech startup in other parts of the world. And most of that's based upon this concept of unmet need that's applicable in the China market, where traditional financial institutions aren't necessarily serving the consumer population base in the same way that the others are in other parts of the world. So China is a very special situation, but I do think that the trends that are occurring there around mobile penetration rates and the way that all demographics of mobile users, even seniors, are having millennial type activity about how they use their mobile phone to transact. There's certainly a significant difference there in China versus the rest of the world, but I do believe that these China trends will have impact globally as the rest of the world transitions to the same type of online activity that's occurring in the China market today.
You think it'll be picked up internationally as well?
I do. I think there's certain specific trends that will not, but the concept of using your mobile device for your central transaction point with not just financial institutions or financial services and products, but with all types of daily life is a trend that's global. And I think that the fundamental question on this panel, kind of what about 5 years, what's going to happen is, I do think that there is this transition to consumers using their mobile device and getting access to financial services and products in a place different than a traditional bank. But I do believe that the bank itself will be a central part of that transaction going forward. It will just have a little bit of a different role in the future than it does now.
It's a great place to bring you in, Jing.
That's absolutely right. I agree with Barry. China really is in many ways the global leader in FinTech already, notably in 3 areas. Number 1 is payments. Number 2 is online lending. And number 3 is investments. So if you look at payments, actually China really has leapfrogged the rest of the world. Only about 10 years ago, I think China was still very much a cash-based economy, while the people in the West were using their plastic for all their transactions. But in China, of course they have credit cards, but it's not nearly as prevalent. People basically jump from cash to the mobile phone. And 95% of the people in China that go on the internet go on the net actually via their mobile phone. Many people don't own a PC. They just skip the PC age altogether, right? So if you think about the online payments, whether it's Alipay or WeChat Pay, they're incredibly powerful. And the user numbers, of course, are number 1 in the world. So this is one area where I think China is leading. And number 2 is online lending. The point that Barry made, unmet customer needs. Traditional Chinese banks are very large. Each of them has 20,000 branches. Postal Savings Bank has 40,000 branches, right? However, a lot of these large banks are not set up to serve smaller customers or entrepreneurs. So there is a large unmet need. So therefore, if you think about Alibaba and JD, they do business with hundreds of millions of people in China. They already have the data on what they buy, what they sell, what they own, right? So the next thing they do is to make small loans to these entrepreneurs and small businesses. So that's a natural step.
I actually sat in a panel in DC a couple of months back, and they had the CEO of Cabbage on the panel, and she was saying, that's part of the whole dynamic of collaboration driving things is, regular banks, they want that business. It's not that they've been ignoring it because they didn't want to do it. It's that they were ignoring it because that scale is something kind of below them, or it was something they didn't traditionally want to be dedicating resources to. So now that these startups are there, it's not like they're scared of them. It's just that they can realize that there's a lot to be gained, and 2 + 2 can equal 5.
They also have the data, right?
Yes.
So it's very important when you don't have credit scoring systems in China that's in a very sophisticated stage, right? Large banks don't have the data on their customers. These online e-commerce platforms do. So they know what the habits are, they know how much they own, they know how much extra cash they have in the account. So naturally, they can, make lending part of their business. And the other thing that's very interesting is where I think Chinese fintech firms have done very well is investments, right? Again, this is an area of unmet needs. A lot of Chinese consumers for the past many years would put their money in cash. As you know, cash around the world these days doesn't give you much interest at all. In China, the interest rate is 0.25%, no matter how much money you have. And then there's a stock market, which is very volatile. Some people call it a casino. So what's in between, right? People want to have higher returns on their investments and their their savings. They have nowhere to go other than putting money in the bank account or the stock market, which is deemed too volatile. So therefore, Alibaba came up with Jimubox, right? So for your e-commerce transactions, you have some extra cash. You put it in Jimubox. Then you earn actually much higher interest than what the banks give you.
It was pretty impressive.
Yeah, I mean, over a year, they had 185 million customers. I believe this is still the largest money market fund in the whole world.
What role is, speaking about Alipay, what role is regulation going to play in that? I mean, banks can help get things across the line. And I think that's part of what's at work with the growth in China as well, is that especially with Alipay and Alibaba just generally from the start has always been about getting kind of permission post facto for a lot of things, or at least massaging their way through. How is that what's slowing down the US market in some ways and other global markets as well? It's such a new area. How is regulation going to play into the next 5 years? Barry?
I can say that from our standpoint, I mean, if you look at the regulatory situation in China, it certainly allowed fintech businesses to get to market much more quickly than they would in other markets. There's no doubt about that. The ability to launch products much more quickly, test certain types of products and services, that certainly is a large advantage. I think that the mindset of being open to how financial technology can solve some of the societal issues around inclusive finance have been supported from the central government level, which has given us a huge amount of support to go do new things. Just speaking, giving you a little bit of an example about something in FinTech's business that's quite unique in how kind of how we look out into the future and how things will work. We believe that the financial services transactions will occur not necessarily by financial services businesses, and we are part of our core business model is in facilitating that. So we integrate our technology into non-financial services type businesses and create financial service transactions out of it. For example, we're doing some very significant work with the online travel platforms in China. China Telecom is an example where we're embedding our technology into their offline mobile stores, where you walk into a mobile store, want to buy a phone, you can apply through our mobile app, which the customer sales agent has, and get a real-time decision to get a consumer loan at that store. And that can be done way out in the frontier markets, in places where it would be impossible for a bank to go and set up an offline store. So we really fundamentally believe that these financial services transactions will occur outside of a but in partnership with a bank at the end of the day.
Absolutely.
Yeah.
Well, we're kind of getting close, and I wanted to get you on really one more thing, and it's a bit of a poison chalice, but we are on here where they did ask us to do some crystal ball gazing as well. So there's a lot of other avenues of fintech that we haven't really touched on. I was reading Erin Griffith, the Fortune writer. She had a piece in her column a few weeks ago. Basically, this is her quote: says, "FinTech is out, InsurTech is hot, RegTech is next." Of all the kind of fintech areas, we've got so many. It's payments, insurance, investments, deposits, blockchain, crypto even. Where do you see the kind of next 5 years? Which ones are hot? Do you agree with that statement about which areas are in and out right now, and where the future lies on some of this stuff?
There are many different hot areas. I mean, I just want to use payments as an example because that's an essential part of daily life, right? I would say the payments area is where you have a lot of new innovation happening. I just want to read you some statistics, which is really incredible. JP Morgan every year, I should say, we process through our QuickPay 94 million payments. That sounds like a very big number for the US. But Tencent, the Chinese company, over Chinese New Year, 5 days, they processed 46 billion payments. So over 5 days, a lot of that is red packets, people giving gifts to each other, but that's still a payment, right? And basically that means 800 million payments per hour. Visa has a maximum capacity of processing 25,000 payments per second, but Alipay can process 50,000, twice as much per second. So this is one area, I would say payments, right? We cannot live without payments, transactions, right? So this is one area where I think a lot of new technology will be developed to make it faster, more convenient, more efficient for the consumer.
Barry, your thoughts?
Yeah, I think this concept of fintech is out. I definitely don't agree with that. I think it's just getting separated into different verticals that have a much more of a micro focus. But I do. You know, if you look at RegTech, which is getting a lot of attention at the moment, I fundamentally believe that every fintech business is a RegTech business.
Yep.
You know, so I think of the major struggles that we you know, around developing our business model, changing our business model based upon on Chinese regulatory trends. You know, fundamentally, we're a RegTech business, right? We're doing things to create, you know, better KYC, better AML procedures, understanding these types of policy decisions before they happen. So I think any financial business for the next 5 years, any financial services business, whether it's a bank or a fintech startup, is a RegTech business, because you're constantly trying to generate or create new technology to solve some of these regulatory issues that will always be prevalent.
Absolutely.
I also think in the next 3 to 5 years, the line between traditional banking and fintech companies will be blurring. I think traditional banks have to, in some ways, become fintech companies themselves, right? So if you look at JP Morgan, we spent $9.5 billion US per annum in technology. This is one of the reasons why our bank has been so successful for so many years. We never stopped investing in technology. About $3 billion is dedicated towards new initiatives. And we spend about $600 million per year on fintech investments. So we realize the challenges facing a large bank like ours, right? But we cannot stop investing. So we have a 360-degree approach to fintech investing. Sometimes we take equity stakes in them. Sometimes we partner with them without an equity stake. Sometimes we use their engineers. So it's a very holistic approach to fintech. And I think every single large bank needs to do that. Otherwise, we'll be left without business.
Okay, well, that's a really comforting place to end, isn't it? But I think we'll wrap it up there. Thanks for your time, everyone. Appreciate it.